Hello everyone, it is Sunday, January 1st, 2022, and this is episode 44 of Odds Are, your S&P 500 weekly market forecast. First of all, I just want to wish you all a happy new year. Hope you guys had a wonderful time with friends and family, got a chance to celebrate and bring in this new year. Also hoping that this new year brings success to you all in your trading endeavors and whatever else you decide to throw your money, time, or resources behind. All right, without much further ado, let's jump right into what happened last week. All right, so last week, I was wrong. I was wrong about the direction. So I said that I didn't think we were going to hit one of those two breach points. I didn't think we were going to go up, right, to the 47.92, and that's exactly what happened. Now, if you remember from last week, we did talk about that 4,800 psychological barrier, that resistance level that we would go up and kind of stop before it, and that did come true. So we actually went up, approached 4,800, did not breach 4,800, and then pulled right back down. So we did have a breach of the breach points, so that forecast was correct. We did stay within the expected settlement range. That was correct. But I didn't think it was going to happen. I didn't think 47.92 was going to get hit, and in the first trading day, Monday morning, it just took off, and then we just kind of stayed right up there in the high 4700s. So you can see that we are still up towards the upper end of the Bollinger Band. We're not yet back down to that red midline. Now, of course, you see the direction of the red midline, so it's going to continue trending up as long as we stay up here. So that interception point, when it does occur, could be a little bit higher. Not necessarily saying we're going to go right down to where the midline is right now. But, as we go into this week coming up, be on the lookout. We could take a bounce back up and test that upper Bollinger Band again, or we start moving towards that red midline, which will be going up as well. The, parabolic SAR all the way down there, not even close, and nowhere close to the lower breach point or the lower settlement limit. All right, let's take a look at the moving averages. No surprise here, right? Because we just had this huge up week where we're just making new all-time highs. We did flip the short term back to bullish. So now we are bullish on all time frames, short term, medium term, and long term. And that is obviously because that's the way the market's been going, right? It's no secret here. It's not a tricky algorithm or anything. It's just basically looking at the 5-day average versus the 20-day average, and are we above? And that's your short term. So yes, we are bullish in all three time frames. All right, and let's take a look now at what we are expecting for next week. So next week looks like a much more traditional setup, right? So we've had some weeks in the past month or so where the breach points are outside of the expected settlement range. One's outside, one's inside. They're really close. They're really far. All these different variations. This right here is what you would typically expect to see. You'd see the breach points, either side of the where the market closed, somewhat equidistant, and then you would see the expected settlement range being out even wider than that, right? With plenty of room for the market to breach one of those 2 points and still stay within the expected settlement range. So we're looking at 47.16 as the lower breach point, 48.03 as the upper breach point, with an 81.28% chance of a breach next week. And we are looking at the lower settlement limit at 46.41 and upper settlement limit at 48.55, with a 79% chance of staying within that range. The parabolic SAR has now gone up to 44.52, still pretty far out of range, but all in all, this is a pretty neutral week going in. No directional bias, no call one way or the other. This is kind of the bread and butter here, people. So we're looking at these breach points and we're saying, hey, good chance we're going to breach one of those, but stay within the expected settlement range. All right, let's put that all together into the relative view. So here we go. This is where we're at. See that nice ride up to the Bollinger Band and then kind of stalled after that, and now that leaves us right smack in the middle of the pivot points. The breach points and the settlement range are all just spread out nicely, and we are looking to see what happens. Now, when we combine this with the Bollinger Band, looks like 48.03 is still within the expected, the Bollinger range, so we could easily go up there and breach that, pull back down. I don't see any risk of closing above 48.55, But looking at the 47.16, if we do breach that 47.16, it could be that later in the week, that's where the midline might end up. So take a look at those two later on in the week as they intercept. So that red midline will start going up towards where that red line is for the lower breach point. That could be a nice intersection point where the market could actually gravitate towards. All right, and now, if you didn't see that one coming, so as I said before, this week it was my turn to say, hey, I didn't see that one coming because I did not think we were going to go anywhere near that 47.92. I thought we'd figure just like stay within the small range and maybe not even have a breach at all of the breach points this week. But that's not how it played out, and that's fine because again, I don't strive for perfection. I'm not trying to be right on every single call. I'm satisfied with the fact that, hey, we did have a breach of the breach point, so high probability, 81% chance, that did happen, stayed within the expected settlement range, that happened, and also my call on the fact that we were going to be bound by that 4,800 level, that we were not going to breach above that, it was going to kind of act as resistance, and that's exactly how that played out. Now, how that leads into next week, well, guess what? We're close enough now where we could easily now go above that 4,800 and stay above it. That's within the realm of possibility, so don't discount that. All right, and now we'll wrap up with the quote of the week, which is by Mr. John Neff, who was the manager of Vanguard's Windsor Fund between 1964 and 1995. And John says, "It's not always easy to do what's not popular, but that's where you make your money." Now, people call this contrarian investing or trading. People will say that you have to, buy when the market is low and sell when it's high, but now you're getting into picking tops and bottoms. There's a lot of ways that this could make a lot of sense and a lot of ways that this could go wrong. But the essence of this quote is that you should not be doing what's popular. Now, that sounds odd because you would think that most people, or the trend is your friend, right? And that's one way of looking at the market. The trend is your friend, and yes, that is one way of trading. But if you're only doing what you think is popular, then you're not really doing what you set out to do. You're not really playing, you're not running your own race, basically. So if you're led by what other people are thinking, eventually you're going to be led astray. Now, where you make your money is when you have the guts, is when you're really willing to take the risk, when you're willing to step out there and say, you know what, I've ridden this train long enough, and I think that it's time to change course. I think it's time to take this trade because I see something that is an opportunity. And the thing is, the market rewards those who are willing to take risk, right? If you have no risk, then there's no reward to be had. You have to be willing to take those positions, even if they're not popular. You have to be willing to take the losses as well, because you're not always going to be right when you do what's not popular. But when you go against the crowd and when you get an opportunity and it goes in your favor, those are the ones you remember. Those are the ones that are going to really keep you going. They're going to, bring up your portfolio value. They're going to be the ones that give you confidence to continue doing what you're doing. So do not miss out on those opportunities for fear of doing what's unpopular. All right, guys. Well, I hope you guys have a great rest of the work week coming up. First work week of 2022. Make it a productive one. And I will see you guys here next Sunday.